Hello, hello. Welcome, everyone. This webinar is brought to you by the UC Berkeley, by Land Economics Society and UC Berkeley's Terner Center for Housing Innovation. Thank you for joining us. We're going to let all these people filter in. Oh, we have an audience. I'm loving this. We're on the most wonky topic in the legislature. And please, if you have any questions during this webinar, please use the Q&A feature for your question to go through. It'll be an exciting chat. Remember, Q&A feature, or we will ignore what you send in the chat. Actually, we can't even see it. Beautiful. Oh, I need to talk louder?
Yeah.
Oh, wow. Okay. All right. The office has told me that I need to speak louder so everyone can hear me. That's great. I love being loud. Thank you so much for joining this webinar. This is co-hosted by the Land Economics Society and UC Berkeley's Terner Center for Housing Innovation. Please use the Q&A feature. We cannot read the chat. If you have questions, use the Q&A feature. We're going to have an allotted amount of time to answer your questions. This is going to be a very interesting webinar. We have legal, finance, policy, research all coming together to examine construction defect liability, which hasn't really been examined in the state of California for around 20 years now. So this is an interesting topic. Might greatly impact homeownership rates in California. And people are still filtering in. This is great. And thank you everyone for joining us. We will start now. First, I would like to introduce our moderator, Adam Briones. Adam Briones is the Chief Executive Officer of California Community Builders, where he leads research, advocacy, and community organizing efforts to end California's racial wealth gap and housing crisis for communities of color. Well, do you want me to go more into your bio, Adam? You're one of my favorite people in California.
Well, the feeling is you're one of my favorite people in the United States, Mohammed. So the feeling is very mutual. Hi, good morning, everybody. And thank you for that very kind welcome, Mohammed. Again, my name is Adam Briones. I run an organization called California Community Builders. We focus on closing the racial wealth gap using housing and home ownership as our primary tool. And I just want to share, I'm so excited to have been invited to participate today. The topic that we're going to be discussing today, construction defect reform, is probably one of the least discussed but most important topics in housing policy today, especially California. For those folks that aren't familiar and are newer to the topic, it has an especially big impact on the sale of condos, for sale apartments, multifamily home ownership, whatever you would like to call it, but those for sale units that share walls with other for sale units. And my organization, which again focuses on closing the racial wealth gap and creating more first-time home buyers within formerly redlined communities, we think this is an incredibly important topic because condos and other forms of multifamily home ownership are the most naturally affordable, unsubsidized variety of home ownership available, especially for lower wealth communities. And when we are able to build housing, especially for sale housing, at a more dense scale than we have in the past, that has a hugely beneficial impact on the state's climate goals. So we really see this as a very, very important topic, and we're so excited for everybody to be joining today. And of course, I think inherent in this conversation is a big question of how do we ensure that consumers are protected in what's going to be one of probably the biggest purchases of their lives, but that we can actually build a product that I mentioned could be so beneficial to the state if it was expanded in terms of production. So without further ado, we brought together a great panel today. Or I should say Mohammed and the Terner Center brought together a great panel today. And while I like to generally be fairly modest, we have some VIPs on the Zoom today, and I'm really, really excited to introduce our panelists. First, I'm going to go ahead and start with David Marshall, who works in development at West Bank, a prominent multinational developer. His role includes legal, insurance, finance, corporate structure, land use, construction, and governmental compliance. David also has a particular focus on conducting policy research on complex issues, navigating intricate regulatory frameworks, and contributing to innovative and strategic development solutions on a national scale. David holds a bachelor's in political science and geography from the University of Tennessee and a JD from Belmont University College of Law. And next up, we have Tammy Beck, who is a partner at Stoll Reeves LLP and a member of the firm's real estate and construction group. Tammy has over 30 years of experience representing clients in all areas of construction law and project development, routinely advising owners, developers, and general contractors on a wide range of construction projects, including commercial, mixed use, all manner of residential, and food processing facilities. Tammy primarily represents clients in California, Idaho, and Nevada, and in addition to real estate, also represents clients on construction-related aspects of energy-related developments. And last, but very not least, Michael Lane is the State Policy Director at the San Francisco Bay Area Planning and Urban Research Association, better known as SPUR, and has an extensive background in housing development, public policy, and political campaigns. Prior to joining SPUR, he worked for organizations such as SV at Home, the Nonprofit Housing Association of Northern California, and Self-Help Enterprises. He has also played a leadership role in numerous political campaigns, such as the 2002 and 2006 statewide housing bond campaigns, and the 2020 San Jose Measure E campaign for affordable housing funding, all of which were successful. Michael also has served on numerous boards, including president of the board of the Housing Leadership Council of San Mateo County, and was previously a board member of Housing California. So big welcome to all of our panelists today. And before we get into our panel discussion, I'd like to hand it back to Mohammed for a presentation on the issue we'll be discussing today.
Thank you so much, Adam. And wow, that was a great choice as the moderator. I mean, you just blew it out the water. Thank you so much for joining us. Thank you, everyone, for joining us. Yeah, today we're going to discuss our research behind construction defect liability. This was a paper released by the Terner Center a few months ago. And this presentation, this webinar, is co-hosted by Land Economic Society. The inspiration for the construction defect liability paper came from two organizations, LAI, which has a great webinar online that also features Tammy, that's part of our panel, on sort of like the differences between California and Canada, and also inspired by a California Community Builders report on finding that mostly people of color live in condos, and this is their first entry to homeownership opportunity. But yeah, today I will be presenting on this. I'm Mohammed Al-Maldin, the Policy Associate for UC Berkeley's Terner Center for Housing Innovation. Next slide. So this is an extension of our work on the first step, homeownership ladder paper done by the Terner Center, where we find that homeownership rates have been declining throughout the state of California. Between the year 2000 to 2021, the share of adults that own their home dropped from 50% to 44% within the state. And the most significant reduction occurred between Californians aged between 35 to 45 years old. And it has declined regardless of your college degree, your marriage, household size, amount of children. Everybody has seen a decline in home ownership. Based on the California Community Builder study, a majority of people living in condominiums, which is usually seen as entry-level homes, are BIPOC individuals, Black, Indigenous people of color, and also a lot of homes for entry-level homes that are under 1,400 square feet have seen a significant decline in construction across the whole country, where they account for less than 10% of all homes constructed. And smaller homes mean more affordability for especially entry-level homeownership opportunities. And the pool of owner-occupied homes are usually centered around single-family homes. And here we analyzed ACS data, looking at the average cost of a unit if you want to buy it in the state of California, where a single-family home is about $250,000 more expensive than you would find in a unit in a 5+ unit building. Next slide. And we're seeing this in key markets. We examined 4 key markets to see how basically how much more affordable a condominium is than a single family home. And we're seeing this across the board where anywhere from there's a 25% to a 50% reduction in home price. And a lot of these condominiums were built a long time ago, right? And we're going to explain why we're not seeing a lot of new homes being constructed for sale in the state of California, which is the point of this webinar. Next slide. See, we're seeing this in San Diego, we're seeing this in Santa Clara, we're seeing this across the Bay Area. Next slide. But now when you really need to focus on there's different home types leads to different opportunities. So 80% of single family homes are for sale, while 90% of 5+ units are for rent. And if we want to build more infill housing, especially in urban centers, we need to increase the amount of homeownership opportunities that are available. I mean, it's a little synonymous with kind of like the American thought of homeownership, that homeownership is a single family home. And really, construction defect came to light, really, the study of this topic is that I was looking for a home to buy in the Bay Area. And there were some affordable condos that were in the market, but I couldn't buy any of them because banks couldn't finance loans under homes that are under litigation. And I explored 5 different homes as a first-time homeowner, possible first-time homeowner, and they were all under litigation. And I was like, what is this litigation? What is construction defect liability? So we go on to the next slide. So in California, there is this factor called construction defect liability, which is sort of like a warranty for new homes that are constructed. So it includes problems in workmanship and materials, architectural and engineering plans. It's meant to protect a homeowner from any problems that the builder might have created during construction, right? And there's also like a gradual statute of limitations of when a lawsuit could be brought forth. So if there's major issues like foundation or framing, you have a 10-year limit to bring a suit. Plumbing and electrical, you have 4 years. You have 2 years for water intrusion, windows, doors, paint, stucco, and 1 year for any noise issues like problems with insulation. So this is meant to protect anytime a homeowner from any sort of defects that they might find in their home. Next slide. But what we're seeing is that the sort of apparatus of consumer protections in the state of California heavily incentivizes lawsuits throughout the space. And this actually has an impact on how much condominiums are being constructed within the state, which we'll see in a second. So construction defect is defined, there's a statute of limitations, and in 2002, there was an insurance and legal crisis. So really the history of like for sale condominiums started as more co-op structures in New York. It sort of became more apparent that you could buy for sale homes across many major cities. There were times in the 60s and 70s when there weren't many protections for first-time homeowners. The courts saw it as like an as-is product. Like if you were to buy a used car, any of the defects that are there's like a buyer beware. That's what was happening with homes. And it led to a lot of lack of trust throughout the market. So in the 90s, a lot of states throughout the nation, I think pretty much all of them now, have some sort of legal apparatus on how to protect consumers when it comes to home purchases. And in 2002, there was an insurance crisis, similar to what we're hearing now when it comes to fire insurance and home insurance issues in California. And also a legal crisis due to a court case that our panelists will cover in a little bit that led the legislature to create SB 800, which is a mutually agreed sort of deal between the builders and other groups on how to just basically have consumer protections in the state. And it allows for a right to repair. Go back one slide. It allows for a right to repair where if any issues are found, the builder could go in and do such repairs on a building that has any issues. What we're finding is there might be some ramifications due to construction defect law. Rental builds have a 4-year statute of limitations for the warranty versus for sale that has 10 years. So a lot of builders would opt out for rental product because they aren't on the hook for any repairs. There are a lot of lawsuits when it comes to non-structural repairs, right? The lines get blurred between the year periods when it comes to basically bringing the case forward. So you could have problems with your paint and your nail pops and your stucco, and you might bring that as a case at year 6 when it was covered at year 2. And also, basically, insurance companies have been seeing the increase of lawsuits when it comes for sale homes, and they will just not insure subcontractors and general contractors. So the workforce itself, architects and engineers as well. So if you want to build a for sale product, you can't find a workforce that's insured for that, but you can find a workforce that's insured for a rental product. So the insurance industry has basically left just the workers market. I mean, the labor market of what is used to construct a home. And homeowners are incentivized to bring suits to builders, right? So people in condominiums are much more easier to organize and also have set HOA funds that people in the legal field could utilize to bring forth lawsuits. And we find, and you'll see throughout the paper, that the plaintiff and the defense doesn't have much of an incentive to repair or settle. So the homeowner might be dealing with litigation for years on end, and defense attorneys are paid by the hour by insurance companies. And the plaintiffs want a settlement because the right to repair, they don't get really as much of a payout. So really the legal structure and incentives around the legal structure are really a barrier. And it leaves people like me that are hoping to buy a home in the Bay Area like, oh, no one's going to back this loan because there's this whole apartment building's under this whole condominium building's under litigation. So it has this adverse effect. Next slide. And we're seeing this across like key major markets. We're not saying that construction defect is the main cause of this, but it is one of the causes of the lack of condominium starts that we're seeing across the state. So you're seeing like 32,000, 33,000 condominiums being built in a year in Los Angeles and Orange County to less than 3,000 in 2022. So from 2006 to 2022, or if you were to count all the units constructed between 2014 and 2022, which was really a boom period of the American economy, it still doesn't measure up to what we've seen in 2006. Or in San Diego County, where you have nearly 30,000 units being built that are condominiums, and that's more than the 3,000 condominium units that were built throughout the state of California last year. Next slide. And across the Bay Area, we're seeing very similar trends where there was this really upswing in homes. Really, there was this sort of like security caused by SB 800, but then the recession came. A lot of general contractors and builders were out of business, and then the legal apparatus made it less likely for anyone to want to build a for sale product. And these effects are pronounced throughout the Bay Area. Next slide. So in this paper, we decided, what do other states do to try to increase homeownership opportunities? What does Canada do? Because Canada has had a huge issue with the faulty leak problem. I think I said it correctly, where condominiums starts completely stopped throughout the country until they kind of created the solution. And now they have one of the highest rates of multifamily for sale units that we see in the Western Hemisphere. So first we look at Minnesota. They made the reforms just a few years ago, so we don't really see how much of an impact it's had in the market, but they changed their statute of limitations to be a lot earlier. So, right, so the faulty workmanship and materials is year 1, plumbing, electrical year 2 instead of year 4, but this major construction defects are at year 10. but mediation is required before a lawsuit can be filed. So it appropriates incentives because maybe mediation, they can get the repairs in quickly. New Jersey has a very interesting program that since 1977, if you were to build a new home, a portion of that cost to build the home goes into a pool of funds that's a state warranty program. So whenever there's any issues that comes with the housing unit, you could just file a claim. And if the problem's not addressed, the warranty covers the cost of repairs. And lawsuits can still be pursued after. So instead of waiting in limbo for a few years, they could file a claim with the state warranty program agency and have the repairs nearly immediately. And it's all self-funded by new construction. Next slide. And then we have Hawaii, Hawaii and Canada have very similar warranty periods as California does. Hawaii uses the funds of new construction to create a condominium education fund, very similar to what we see in New Jersey. But it primarily focuses on just the legal aspects. Cost-covered mediation is covered by the fund, and also voluntary arbitration agreements between homeowners and builders, sort of to not have to deal with the court system, the multi-year court system. In Canada, which dealt with the faulty leak problem, which basically a lot of the buildings were just leaking in Canada, and it was just destroying all the housing stock, and no one felt safe buying multifamily because of kind of the ramifications there. So Canada got a lot more strict. They had stricter licensing requirements for their contractors, and the fees paid for those licensing requirements go for additional trainings, so it goes into the future. And every province had to have a voluntary or required warranty program, similar to what you saw in Hawaii or New Jersey. There's just sort of like this warranty program that you could go and file repairs for. We really focus on Ontario's Terion, which is a nonprofit, which California loves nonprofits, which is funded by the warranty and the construction of the new homes, and it's funded by the licensing program, so it doesn't have a lot of state costs. And homeowners could just file any of the issues that they have with the building, with the construction, and it's resolved within 30 days, and there's no deductible from the homeowner. So, there's an issue with my window. I filed this report and I get a payment, so I could pay a contractor to fix it, or I could have the builder to try to resolve the issue. Next slide. And as you can see, when it comes to ownership rates in 5+ unit buildings, when it comes to the overall market, Hawaii is nearly 40% of all buildings are for sale when it comes to 5+ units, versus nearly 10% in California out of all its housing stock. And when it comes to new construction, about 3% of homes in California, so out of 100,000 homes that were built last year, only 3,000 of them were built for sale. While in Canada, which has very similar numbers, nearly 40% of those units are for sale units. Next slide. And we have a list of recommendations that are laid out through the paper. We also covered the state of Utah, which the state of Utah took a very different approach and actually brought their construction starts for sale similar to how it was 20 years ago. But what they did is that they limited the statute of limitations from 10 to 6 years. And if you were to sell your home to someone else within year 2, and that person find defects, they can't sue. They cannot sue the builder or the previous homeowner. So they focus on heavy deregulation as a way to fix this issue. But in our recommendations, we really looked at like how do we ensure consumer protections while at the same time jumpstart more for sale construction. It's implementation of maybe a mediation program with a right to repair. Right, we have right to repair California, maybe arbitration agreements and mediation might be one of the recommendations here. Maybe a new home warranty option, similar to what we see in New Jersey and Hawaii and Canada. There might be some ways of which we appropriate attorney incentives, like defense and plaintiffs benefit from longer legal battles. How do we shorten that time frame? We could look at our graduate statute of limitations when it comes to defects, when it comes in construction defect liability, and also strengthening licensing requirements when it comes to subcontractors and contractors. We're really focused on health and safety, which is a great thing when it comes to constructing new builds, but we don't really take much of a look into the quality of these new builds. That's what we were hearing a lot throughout the space. And the lack of for sale units due to construction defect liability impacts other markets as well. We were hearing in interviews that like co-ops and alternative homeownership methods are impacted by this because insurance companies, even if there is no developer, it's just the GC working with homeowners, they see these alternative homeownership types as for sale units. So the insurance goes up, not many people are insured. You don't have the architects, the engineers, the subcontractors, or general contractors to work on these products. And next slide. Thank you so much. If you enjoyed this, please subscribe to the Terner Center newsletter. Just take a picture. You have maybe 5 seconds, and I recommend it. We only bother you maybe once a month, and I think it's worth it to learn about the latest in research. And I'll pass it back to our wonderful moderator, Adam Briones.
Thanks so much, Mohammed. That was a really great presentation. I want to shout out both you as well as the great team at Terner who has taken on this research, because I know that when the Terner Center writes about it, California pays attention. And of course, that is why we are here on the webinar today. So I do want to go ahead, Mohammed.
One thing, shout out to Sarah Karlinski for co-authoring this paper with me. It wouldn't have been possible without her.
And we should all be shouting out Sarah Karlinski for this great paper, as well as all the great work that she does. And before we get our panel discussion started, quick housekeeping notes. We're going to have our panel discussion until about 10:50 and then open it up for audience Q&A. So we do hope you'll stay on. And we're going to keep the webinar open until about 11:30 to ensure that we can answer as many questions as possible during this webinar. So without further ado, I would love to kick off our panelist Q&A. And David, would love to start with you. We just heard some great data from Mohammed, but as a home builder, I'd love for you to kind of bring us down to the ground level and talk about the cost differences you're seeing today in the market between building rental versus for sale condos and, roughly approximately the same size building, same unit, what have you.
Yeah. So first of all, thank you for having me, and I'm really thrilled to be here. I think, what you're really looking at least from our perspective, is an underwriting question, right? So you're underwriting multiple things, and, like, for example, West Bank, we build predominantly towers. So we're based in Vancouver, which luckily Mohammed just hit on, how much easier it is to build there, especially dense. And then we also are in Seattle down here, Tokyo, and other areas. So, what we're building is towers. And so in that, you really have, I'd say, a few main things that your underwriting changes quite a bit when you're building for sale. One of which that I think is really the thing that hits people the hardest is the insurance costs. So if we're looking at getting an OSIP, which is an owner-controlled insurance program, you're looking at about 3 to 5x the cost for that insurance policy than you would on a rental. And so that hits you right away because you're buying that off the jump. The next thing is your A&E, which you also hit on, is they're taking a lot of risk because of an SB 800 builder is pretty loosely defined, which we can get into that. I'd be more than happy to talk about it. But builder is very expansive. And so when you're looking at that, these A&E, so your architects, your structural engineers, really all the way down into your subs as well. To your point, they're not insured for this a lot of the times. And so in your contracts, you're telling them, yes, I'm building this for sale, or no, I'm not. And if I'm telling you that I'm not, either it's 100%, we can both terminate and walk away if I start to build condo or want to get this mapped, or there's a price escalation that you're going to hit me with immediately as soon as that gets filed. And now all of a sudden that architect that you just paid, let's say, a couple $100,000 for, well, guess what? That same design just cost you $1 million because they're just trying to underwrite their own risk. So what you're seeing a lot of is, instead of us going out, and we're the second largest affordable builder in Vancouver, you're not going out there and seeing a lot of these. Like if you go drive around San Francisco right now, you're not seeing high rises that are affordable products for sale. you're seeing luxury condo, luxury condo, luxury condo, just one after the other. It's because that's the only thing that underwrites, because your margins are that much larger. And so they can handle that increased cost from all these groups that are hitting you with, hey, that's an escalation, that's an escalation, that's an escalation. And that's before you get to your finishes that are going to be more expensive when you build condo. It's going to get to the increased amenities that you're going to add because it's condo, because people are living there. And so you have all these costs that you already knew about that were going to happen regardless. And now you're getting hit with those costs because of the increased risk that stems directly from policy created in California.
That's super helpful, David. And I'd be curious, how often do you make it to the Japanese office? Are you in Tokyo much these days?
Unfortunately, I haven't gotten tapped to go out there yet. I try to ask once a quarter, just to see if anybody needs to go sweep the floor or, just check it out, make sure it's still there. Unfortunately, they haven't let me yet, but I'll keep asking.
Well, if you ever need a home ownership policy person to join you on that trip, just let me know. I'm happy to do that with you.
I'll give you a call.
Next up, Tammy, I'd love to go over to you and zooming out a little bit. As an attorney that sees a lot of these types of transactions, does California have the right balance of protection for the home buyer versus the builder right now, in your opinion?
No, I don't think so. I think they've done a very good job from the past when Mohammed was talking about what we dealt with pre SB 800, and I'm old enough to remember what happened pre SB 800. And I personally like the structure of how SB 800 can work. And I think it done well, it can protect, but there are some, as Mohammed was identifying, there's some perverse incentives, and it just crushes anyone who tries to refinance or sell their unit, right, their condo, if there's litigation. It just won't be financed, and people don't want to buy into a problem. And I tell my developer clients, just unfortunately, you have to plan to be sued in California or Nevada or Oregon or Washington, because of the way the incentives are. It One of the things I think Mohammed was mentioning was a little bit of the difference of Utah that went to a shorter statute. Nevada tried that for a few years, and it actually did help. They made things a little more robust, but I don't see California necessarily taking away the 10 years, as Mohammed had pointed out, from a lot of the other locations are 10 years. So while that might be a developer's wish list, I think my experience in talking to the folks in especially British Columbia shows that that's a really robust protection of blending a lot of what we have in SB 800, but provides what David was talking about, some of the incentives and protections for the developer, because it really is a balance. We cannot weigh one side or the other. We're just seeing now, if we weigh it too heavily to what is defined as consumer protection, and it's truly not, in my opinion, we don't get them built. We just simply do not get them built, because developers will go to other locations and they'll find where they can insure it, they can underwrite it, and they can sell it with less risk. So I'd like to see more balance in a modification of SB 800, in my opinion.
That's really helpful. Thank you for that, Tammy. And David, really quickly, builder perspective on SB 800. Anything that you would add to that?
Yeah, Michael and I tried to get a bill in last year to help out on what I think SB 800 is lacking, and that's really incentivizing builders. And we can say builders in the global sense and how it's defined, or even just say GCs, developers. The main issue with SB 800 that I found is that it really doesn't incentivize you to go fix it. It says, hey, here's a letter, like, let's talk about this, and then boom, now you're sued. I think what we tried to implement is a system to where, let's actually go fix this. And if I go fix this, let's get it a third party inspection and have them say that it's fixed. You don't need to go by my word. Let's go by them. We can either do a QA, QC to come out and look at it, or we could even have a building inspector come out and look at it. And let's say that it meets code and it was fixed and we're all good. And then let's have a release for that builder or that contractor so that they're adequately, incentivized to go out there and fix the issue. Because that's what it's all about, right? Is actually giving you the home that you thought you bought. And let's just go fix it, incentivize everybody to get it fixed. And let's not just have these lawsuits for $500 million and see what sticks.
Absolutely. Thanks for that, David. So I think we've given a high level overview of what some of the problems are, both including Mohammed's presentation as well as this discussion of both financing as well as attempted legislative solutions. But now let's kind of zoom back out into broader solutions. And going back to my intro comments, how do we ensure that consumers are protected and home builders have enough incentive, as you mentioned, David, to take the risk of building this type of home here in California, a state that has historically really prioritized single-family housing at the expense of other types of housing, especially for multifamily home ownership. Michael, want to turn to you. What do you think some of the potential legislative solutions could be at the state level right now?
Yeah, so based on experience and just tracking what California's done vis-a-vis other states over the past 20 years since we did have SB 800 passed, I agree that I think to change that statute of repose for latent defects is just too big of a climb, too much to challenge. The consumer attorneys, as you know, are really opposed to any modifications in this area. So I think that's probably not the place to look. But I do think to make the right to repair live up to its billing and its name, I think is important. And we tried to do a bit of that with SB 470 with Senator Glazer last year, his last year in the Senate, by the way, and he really wanted to try to champion this. And also grateful to the Terner Center in this report, I think, which kind of reflects some of the studies that we've been doing. We've been looking at Washington State, for example, with David on this idea of a third-party inspector requiring a building permit when you make the repair. So you've also got the local jurisdiction involved with eyes on it. And then this release, if a developer does make the repairs, then you should be able to get a release. And if a homeowner declines the repairs, then that should be admissible in court if it goes that far, to try to disincentivize some of the litigation and really focus on the repair if that's what's at stake here. And so those are the things we try to do and move away from strict liability to what we were calling a standard of care for the industry when you're constructing these buildings. And then, like I say, with that opportunity repairs, because there will be times when you do need to repair defects. And we also were focused on the insurance premiums, which is just a killer, I think, for, as we have said, for the developer builder, but also for the architect, engineer, GCs and the subs who oftentimes don't want to touch these products either. So the workforce, I think, which Mohammed had mentioned, is a major issue. So I think what we found, though, is to try to modify the existing statute that was created by many stakeholders. Remember, our Senate Pro Tem John Burton was involved in the center of that at the time. Always entertaining when Senator Burton was involved in legislation, but he was able to get something through. And now we've had time over the past 20 years to see what's worked and what hasn't. But I think some of the builders are wary of trying to make changes in the existing statute with fear that they'll get something worse. Just given the composition of the legislature, and because it's easy to demagogue the issue and say that we're not protecting consumers when it's really just trying to find that right balance and recalibrating, because I think we over adjusted with SB 800 and now we've not able to provide a product for the consumer in a meaningful way. And so I think propose is really work in a separate section of the code and and really authorize a pilot program. We've got some mayors in our cities out there who really see a need for this type of home ownership, particularly in the urbanized and most expensive coastal areas for that entry-level type of a housing. And if we could get some players there, I think we want to look at the warranty type of an approach, like New Jersey, like the one in Canada, with a third party, potentially either a nonprofit organization to take charge of those repairs, and then what potential role for the California Department of Real Estate as well. And so I think that's what we'd like to look at and work with legislators on in the upcoming 2-year session.
So I think that's super exciting. And Tammy, I did see you come off mute. Did you have a?
Yeah, I'd like to chime in just on seeing how it's worked before or didn't work before. And you did have a lot of the subcontractors or in the GCs too, but a lot of the subs just saying, I can't afford to build that. I would build something that is a rental or go to commercial, but I can't afford to stay in the business because I'm drug into all these lawsuits. That's another problem too, if you don't have an OSIP like David was talking about, so that each one of those subs has to have insurance and it stacks up and it incentivizes fighting as well, rather than an OSIP or even a CSIP, which is a contractor controlled. Everybody is working together, not that they're necessarily perfect, but they are a uniform approach instead of trying to do finger pointing in a traditional litigation. But also, I have found that if one of the problems with SB 800 was the timeframes are, on the one hand, for developers, very short. Once that notice goes, you have 14 days to respond and address it. And unless people are phenomenally prepared in the beginning to deal with it, they can get caught short and they get railroaded, and nothing will then be repaired. You'll end up heading straight to litigation, and maybe your development falls under a PUD and you have to do Calderon, and you get a little bit of what I would call a dog and pony show mediation, not a true resolution, because the financial incentives are different, and there's cottage industries on all sides, frankly, that do not promote. So the goal in my mind, and seeing it where it worked best, was when you had developer GCs. I like the way that David described that, because those are more closely aligned in the long-term market. To both build and have a product as well, because they're not adverse. None of them want to be in litigation. But that unfortunately, they're building knowing that they're going to get sued. And so they look for the things that they might get sued on, and they adjust in their quality assurance. But I remind people, these are hand built. We all need to remember that construction is one of the last hand built things around. And it's a very significant item. When you understand all the parts and pieces that come together, things can go wrong completely unintentionally. So structuring it so that there is a little more incentive on the developer GC side to build these that don't have as great a return on investment as David was talking about, and have a higher cost, but then also gives the consumer protection. And we've done it before because California has built before. So I see that there's the balance. I would like to see, I agree with Michael that a test, kind of a pilot program, would allow the stakeholders to see if something works without saying we're going to destroy the entire system. And we're not stuck like we were pre-SB 800, where you could not purchase insurance. I had clients that had to go find very unique ways to insure for their lenders and insure for the liability, and it was obscenely cost excessive. And unfortunately, that gets translated into the consumer, which is not good either. So I'm a huge fan of finding a pilot program that balances it, where everybody understands what we're trying to do, and maybe work out the incentives so that everybody has a benefit. And then lastly, because I could talk about this forever, but I'm going to stop. I do really like the way that the warranty program provides a backstop to consumers. It provides also somewhat of a backstop to the developers, because they know that their insurance, if they build it right and they can demonstrate that it was repaired, it is quality, they're not going to get their insurance rates going up just for the litigation side of things, because that is included. But the homeowner also understands it's not just that developer, right? They can go to a warranty program. They don't even need lawyers. To be honest, a lot of times trying to get the lawyer cost out of it is a very significant issue. So I think that my observations and watching what Canada did with the other factors that, David is very well on the other underwriting parts, would be a beneficial move for California.
Thanks for that, Tammy. And everyone, audience, you heard it here first. We had an attorney asking for less work. And so I think that shows the gravity of the situation we're in. David, want to go back to you. Tammy kind of shouted out some other locations where there were some good solutions. In the really broad and varied geographies that you all work in, what is working in other parts of the country or the world that you think California should really be thinking about?
Yeah, I think one thing that Canada does really well, or I should say British Columbia does really well, is that within their construction defect laws, they have tolerances for different items within a project. So let's say you're windows have certain waterproofing thresholds. Your floor has certain thresholds about what can peel up, and things like that. How many cracks there can be. Not, I mean, of course, you don't want any cracks, but you understand kind of the point that I'm after. I think something like that would be really helpful because it doesn't say, this thread in my carpet came up and that's an issue. It's like, okay, well, let's go to the tolerances. Okay, that's actually tolerable because it doesn't affect anything. So you can't sue on that. I think something like that that's very common sense and logical, which I think is a bit overblown right now, saying those things, especially in our election. But I think something like that is very logical, right? Like, let's have tolerances because, to Tammy's point, these are hand built, right? There are people going out there swinging a hammer, and we all make mistakes. So things like that happen. Of course, if it's a big issue, it should be fixed, right? So at the top end of that tolerance, it should get fixed. In other jurisdictions within, the United States, I don't think anyone's advocating for like a Texas system for California where it's like, let's see how much we can build and just see what sticks. I don't think we're after that. I think looking at it some ways in other portions of the law as well, like if you look at Hawaii with their deposit laws, where you're able to put in 100% of a purchase price and the developer is able to bond against that and draw from it. I think that would really decrease our cost of housing because ultimately that's part of what we're after, right? Like that's a symptom of our construction defect, but it doesn't have to get fixed just by our defect laws and policies. If we look at it from different areas like our deposit laws, so we're able to deposit 100%, up to 100%. And you're able to bond against that money and then draw on those funds for your hard costs, your soft costs, your finance costs. And then you can build much cheaper. So now you're driving down the price, and maybe at that point you're able to afford these high insurance costs that you're seeing. And go ahead,
David. I'm sorry.
No, go ahead.
Well, I was going to say that is supremely helpful here, and kind of what has actually worked in other places that we can point to. I think is really helpful for us to visualize solutions. And I think you bring up something really important, which is that one size solutions, especially for a state like California, don't really work. So we can get to good outcomes with different tools. And I think you brought up some good ones. Mohammed, I want to get you back in the conversation. From your work, your research on both the research and policy side, any thoughts or thinking on what we could be doing to incentivize more condo development here in California?
Wait, I'm totally stuck on what David said. The capital stack is just a bond, and they could just build a for-sale product in Hawaii.
And so it's essentially, it's your deposits, and then the bond is what's insuring against that. And so it's really, it can be a number of different financing mechanisms, or surety mechanisms, I should say. But essentially what you typically see is a completion bond. So it's essentially saying this deposit that you're giving us, we're going to use to actually build what you're depositing to buy. And here's this completion bond. So it's going to get built and it's for you. So again, I go back to that kind of logical common sense, right? Like if I'm paying for something, I want to make sure that I get it. And two, if I can give you this money and make it cheaper so that you don't have to go borrow for it, well, then I'm all for it.
Well, and
Wow.
I'll just chime in
ahead.
on the bond side too. Is anybody who's dealt with bonds is they understand that the surety has an ironclad indemnity with the developer or the GC because you can bond GCs and subcontractors. They don't do it in the normal residential market in California because they think insurance will handle everything. But if you have that incentive, it's incentivizing everybody to do exactly what David was saying and build what you said you were going to build. There's knowing that they can't just walk away, which we saw a lot of after the Great Recession. People just walked. And so the insurance picked it up. Well, the insurance then charges higher rates. So bonding, whether it's on the warranty, which is what Canada does, so the developer GC has an incentive to go repair because they know that if the warranty company, and that one it's a travelers based insurer, will come back and ask them for the money. So they really need to make sure that they can back up what is being built. So to David's point on doing that in Hawaii, Canada has something somewhat similar, but they typically go up only to 25, 35% is my understanding. And there's a mutual incentive for both the buyer and the developer to have it done correctly. Is something that I think we've seen before in California. We were all talking about it before for public works, right? They're bonded. Now, someone could object that, well, you're increasing the cost because you have to go get a bond. But to David's point, I would say, well, let's compare the price of the bond to the price of the insurance and the price of the financing and see what happens when you alter those out. I think that David's experience at Hawaii, I know they've done the math. What's the difference between the price of all these other aspects that are insurance and loans versus bonding, which is an owner's own money secured by the bond, right? And then the kind of the last thing I would say is I'm not a fan of adding another governmental agency in the process, because I think that that just is an additional cost that comes out. And we have inspectors, we have that governmental process, but they are so overworked that you just can't get the same volume that would be required to do a lot of these things. They should be a supplement for more life safety, some critical issues that they operate under. But I think we've seen in other markets that the private market can actually, how should I say this, hold people more accountable on a incentive basis than I've seen with another government program that might intend well, but just doesn't have the robust structure to make sure that the people that are building are correctly incentivized to build it right, to David's point. And the consumer is still protected in my mind.
Yeah.
In Hawaii, the consumer is still protected.
Absolutely, absolutely. And really quickly, we are running at time, and we do want to make sure that we get the audience Q&A as a part of this. So Michael, I would actually kind of love to wrap up this portion of the webinar with a last question to you. We like to give politicians a hard time, deserved or not deserved. But who are some of the folks in the legislature right now that are really championing this issue around, construction defect reform?
Yeah, if I could, Adam, I did want to recognize Senator Glazer again, because he also ran with David and with me SB 1462 on this deposit reform, which we do feel is very important. The California Association of Realtors would adamantly oppose the bill, unfortunately, and opposed in committee. But we do think there is a way to guarantee that we're protecting consumers with the surety bond, et cetera, and would like to continue to work with them on this, because I think this homeownership opportunity is really important. Unfortunately, as I said, Senator Glazer is leaving the legislature. But I would also say, for example, somebody like Tim Grayson's been great. He's a former general contractor himself and has been really interested in this issue. And I would say at this point, there are many members of the legislature who are looking at this issue, and there's really kind of a buzz in the building, as it were, about it. But they also know that the 10-year statute of repose is kind of a third rail, as it were. And so they're looking for these types of solutions. And unfortunately, California has not been as innovative as sometimes we think we are and out in front. So they actually want us to bring examples from other states first, and potentially even from Canada. And that's what we're doing now. And grateful to work with Tammy and others on these models. And of course, David has experience actually building in other places as well, where it's been successful, like Vancouver and Seattle and Tokyo and Hawaii, et cetera. So California needs to do better. And I think we can make that case now. And the Terner Center work really helps to kind of build that. So we'll be working with legislators who are looking for bill ideas next year, over the next few months, and hope to have some champions identified soon.
It's awesome. Thanks, Michael. And Mohammed, I cut you off. You want to close this out?
Yeah, definitely. Sorry, I got so interested by the capital stack. I learned something so interesting right now. And also, I want to point out that David's company builds for sale products in Seattle and Canada and Tokyo and Hawaii. But in I guess San Jose, you can only build rentals because of the construction defect issue, right? And so that's kind of what we're seeing as our case in California. And going beyond construction defect liability, which was your question, Adam. But I'll first state with construction defect liability, the goal is for the homeowner to be protected and to have repairs quickly, and for there to be more homeownership in California, especially entry-level homeownership, and we're not achieving that right now. So there needs to be some sort of reform when it comes to construction defect. There needs to be some reform in pre-financing, right? I mean, Hawaii and the bond, wow. That's something that needs to change. There's also America always loves to say that they want to incentivize homeownership, but if you look at the federal level and some of the work that's being done there, I mean, there's the Fannie and Freddie guidelines might need an examination because they got a little stricter after '08, and maybe really incentivizes people like David and a few other developers that I've talked to build luxury for sale products in high-end markets because they just can't build in places like Sacramento or Oakland. They're just not allowed to, or not allowed to take that kind of risk. I was speaking with some startups that are trying to do more housing, and they're looking at like tax policy, and they're like, if I build a rental, I get taxed 20%, but if I build a for sale product, I get taxed ordinary income 40%. So like, why is the tax structure incentivizing to build more rentals? I mean, there's some things that need to be examined at the federal level. Like, it's not just California. We're seeing this nationwide, the lack of condominium construction starts, right? So when you look at what's going on the federal level, but we could change what we could change at the state level. Like Hawaii, New Jersey, Washington, parts of Canada have really showed us that like we could actually take charge of this issue, because now we're pretty much doing zoning reform in California. But we want more homeownership opportunities, especially since we've seen a huge decline across the state. We need to take on these other issues that aren't as, let's say, as popular, a little more wonky, but it needs to happen. And that's why I'm happy that we have this webinar. And I'll pass it back to you, Adam, so we can answer these 35 questions in 30 minutes.
I mean, I hate to be disagreeable, Mohammed, but construction defect reform is the coolest policy issue I think I'll be working on. So let's get over to our audience questions. To my panelists, please note, go ahead and click the answer live button if there's one that you'd like to answer. Otherwise, I'm going to be using a very unscientific method of choosing questions. But Michael, I did see that you had a question you'd like to respond to, and I think it was a short one. What were the bills that you were referring to when you were speaking?
Yeah, the ones to look at this past year is SB 1470 by Senator Glazer for construction defect, SB 800 kind of reform, and SB 1462 was our deposit reform bill as a package. And Senator Glazer was really strong on this topic. Shoshana in his office was fantastic working with her through this process as well. And they were really committed to the policy. So we'll need new champions in the legislature to continue to pursue these types of reforms.
Thanks for that one, Michael. Got a really good question from Eric Bagwell, who says, if mission-driven developers are motivated to deliver condos or co-ops in California, would integrating qualified home buyers into the legal structure as co-developers investors get around the construction defect? Oh, and the chat just moved there. Get around the construction defect question. And since I lost the question, I'll give that one to David and Tammy. Can we integrate qualified buyers into the process?
My initial reaction is no. I think I should answer maybe. I don't think that necessarily gives your buyer that we're talking about versus, because I also work with custom home builders and semi-custom home owners and builders that have more of that collaboration and do fund a lot of it. You can still have some of the issues, but they're a little more sophisticated in what they're looking at in construction. And I'm not sure it would work in David's model when you're talking about a tall stack for the target market that we're talking about.
Yeah, I think just to kind of bounce off that and also bounce off the paper a little bit that we're here to talk about, right? Like California doesn't require privity of contract. So let's assume that there was a way that let's say it was a build to suit, or like the entire building was pre-sold. Okay. If those individual owners were to sell their units, that new owner would still be able to sue you, right? And so I don't think it helps curtail kind of the long-term risk, and you wouldn't be able to kind of quit claim that risk in your sale either. But I do think something that would be interesting is kind of, and I know we're here to talk about construction defect. We spent a lot of time on this deposit, so I'll make it quick. But I think bringing them in on the deposit side, like we just talked about, I do think that would help drive the cost down. So not in the sense of eliminating the risk, but maybe in eliminating the cost.
Thanks for that one, David. And want to stay with you for a second. Got a great question from our friend Eduardo Mendoza, who's doing great work down south. How would you design a law to make for sale condos affordable for people making 80 to 120% of AMI? How much of an impact how much of an effect would lowering insurance, decreasing litigation risk, make projects more affordable to those consumers that are in that, I guess you would call the moderate income band?
Yeah, I think there's a couple ways to approach that, all of which I think would really require some sort of governmental kind of intervention. I would say, there could be ways where maybe a fund would take more of the risk. So in the sense of like the warranty or the funds that we were talking about, especially like New Jersey, I believe was one of them. Whereas if there was like a fund that was being paid into by the completion of these projects, and maybe those funds would be able to take some of the risk in that they would repair it from the funds. So similar to kind of how we're seeing most states with underground storage tanks. So like if a gas station, if their underground storage tank were to leak and then it's sold, that fund would come in if there's, no pockets to hit. That fund comes in and helps remediate because it's better for the greater good, right? Like we don't want petroleum spills underground all across our state. So I do think that it would be interesting in if maybe there was a lever to pull if you deed restricted to moderate incomes or the 120, so your workforce to your 80, your 60 and lower, maybe there would be a fund that could come in and step in and help. I don't know how much cheaper that would make it if you were then putting money into a fund instead of handing it to an insurance company or an increased, cost from your architects. But I do think that would be something interesting to go down.
Thanks for that one, David. Before we get to what I think is going to be the biggest news article that most folks in America can point to when they think of condo defect, I'd like to ask one more affordable housing question. We got a question that was, has there been a study on how inclusionary housing requirements have impacted for sale condo housing? And maybe Mohammed and Michael, throw that one to you, but really these questions are for everybody.
Wait, you can go ahead, Michael.
Yeah, I'm not aware of that particular study. I do know that for sale product in any local inclusionary ordinance have been adopted, what it would apply to these. And so those that are going forward, it would apply. I think other challenges included just the cost of construction in general in California, and then everything else we've talked about in terms of insurance premiums, et cetera. So that's just an additional cost. And then not to even mention developer impact fees, et cetera. So there's a whole host of things that affect feasibility. But I think condos that go forward now would meet those inclusionary requirements.
Got it. Thanks, Michael. And Tammy, this one's for you. We got a great question. How can we think about the implications of the 2021 Seaside, Florida condominium collapse for a housing abundant future California? How can we incentivize climate smart, high quality, and durable condominiums and ensure that HOAs maintain adequate reserve funding as they and their buildings mature? And I would like to shout out the person that asked this. My pet issue is that we hand over so much power to HOAs in the state and throughout the nation. But Tammy, without further ado, I'll let you handle that one.
Great question. During that Seaside event, I was actually working on a case in Orlando when that happened, and it impacted. That particular one was student housing. So it wasn't a for sale, but it really did impact everybody in the state. I will say, for as much as people complain about it, California's system for making sure there are reserves is much better. This would not have happened in Florida if they had the reserve requirement and the assessment every couple of years to evaluate the reserves and keep it with the DRE within 20%. So, and I did tell that to everybody that I was working with in Florida. I said, there's a way to do it because unfortunately, what we saw on that one was the homeowners in an HOA, the great difficulty is they're all volunteers. You may get lucky and there might be an engineer, there might be somebody who understands one of the aspects of how to maintain it, but ordinarily they do not. And it's coming out of their pocket. And those are a lot of retirees in Florida is what we saw. And they had actual reports from engineers telling them that they must do that. A couple times it was voted down by the homeowners, which is just a strange statement. But if it's hitting and impacting your finances and you're on a fixed income, you have the wrong incentive and you think somehow it's not going to be a problem. So that system was left to the own devices of the homeowners that did not really see the significance of what was going to happen, and we saw the result. The flip side is now it is, you've all probably seen the stories, it's horrific because these people are getting priced out of their condo and they can't sell it because they can't afford the now HOA to fix it. But I will always say this is the deferred maintenance issue. It happens to everybody. It happens to homeowners. David knows that sometimes the developers will get sued for the HOA or the homeowner's lack of maintenance or deferred maintenance. So as a balance, I do actually like California's system on the reserves requiring a report from an independent third party who has to go through their own training and then will recommend. The issue though is I do believe because the homeowners are not nobody wants to be the president. Nobody wants to hear all the complaints. Having a qualified property manager, which is something else I could talk about, as can be a perverse incentive for the construction litigation. We saw some issues in Nevada with that, but it professional property managers that have standards, not I think higher standards than what we have now, that can help volunteer homeowners maintain their asset. Just as Mohammed was saying, one of the most significant assets that they'll purchase is probably a better program than leaving it up to individual homeowners. That's a whole nother topic that has got a lot of issues related to it as well, so that it drives a significant amount of construction defect litigation too, unfortunately.
Tammy, pie in the sky, you have a magic wand. What would you do around HOAs to make it a better risk, or less of a risk for the homeowner, less of a risk for the developer, and just a better system overall?
So it's interesting. I would try, and I know that a lot of the developers did try to have what's called, as soon as they turn over and transition the properties, or they'll transition early because there's a time issue when developers turn over control of the HOA, to have a construction defect committee that should be required to go through certain standards. But I will go back to one of David's points, and I'm sure Michael has dealt with this too, is what are our standards for the locale and what is a defect? A lot of times the lawyers will fight of, you hire your hired gun, they hired their hired gun, and it's a fact issue, and a judge or an arbitrator says, I don't know what to do with it. It goes to the jury or the decision maker. That is incredibly expensive, and frankly, it's a waste of time on the majority of issues. So first, having a standard with tolerances, I agree with David, so that there's a reasonable expectation from both sides. And then when the HOA has that and the property manager has that, they know that just having one or two cracks in your stucco is not actually a construction defect. That is, it's a tolerance. It's, the standard of care is not perfection. And I think those have to then create the program to educate it. But real quick, that can have a downside. If anybody studies the FBI going into Nevada and really going after some of the plaintiffs' lawyers and the property managers who were doing kickbacks to file lawsuits against the developers, because it is a very perverse financial incentive, and the homeowners don't know. They just want what they thought they were buying, and they don't have to come out of pocket for any money, so they don't have any, there's no downside to them to sue, unless they want to sell, or someone like Mohammed wants to buy and can't buy because the lender won't lend. So we have these multiple factors that go into what is otherwise a very simple question, but there are a lot of levers that should be evaluated to keep it objectively reasonable as possible.
Awesome. That was a great overview. Thank you for that one, Tammy. And I may bug you in the future on some HOA questions that I have. Mohammed, I know that you saw a question that you really wanted to speak to in the Q&A. Go for it.
Yeah, definitely. I marked a few questions as an answer live, but I mean, this one was a good one, which I think is really important regarding the whole issue. So Christian Murdoch asked, how do condo conversions fit into the situation? Can a developer build, rent for 10 years, then convert to condominiums? And do SB 800 timeline start at the conversion date? That question actually goes really well with Ed Mendoza's question, which is, how do you envision construction defect liability reform coexisting with the passage of Prop 33, which is Prop 33 is the rent control measure in California. And this goes as to why everyone thinks condos are such a bad thing. Condo is such a dirty word. And it really is just an apartment for sale. So how did this come to be? And it's because when rent control measures were implemented, people converted their homes for sale so they wouldn't deal with the tenant and they were to sell that product. Also, due to construction defect liability rules, a lot of builders would condo map their rental product and at the end of the 10-year period, kick out the tenants and convert that whole apartment complex into condominiums. So it's seen as a tool of gentrification. And number one is to get around rent control. And a lot of cities have banned this too. I think San Francisco's banned this since '82 that you can't convert a rental unit to a condominium. But number two, it goes into the case of construction defect that it is so difficult to build something for sale outright that people are building rentals, kicking out tenants, then selling the units when we could just build units for sale, right? Like this is also a tenant protection issue, where if we were to fix the construction defect layout within the state of California, we could see a lot more tenants being protected because you're going to build a for sale product if you want for sale, and you want to build a rental product if you want rental. And just because we make it easier to build for sale doesn't mean more rentals are there's going to be no more rentals in the market. Think of like, if I'm a developer and I'm building a for sale product, think of me more as like a day trader in the market, right? Like, I don't know what the market's going to be in 5 years, and I hope I could sell my product in a very quick amount of time, or I go under, versus a rental product, which I could build this, and even if the market goes down, I could still rent it and like move to Mexico for a few years until the market bounces back, right? Like long-term capital strategy, like it's great to have rentals and it's short-term gains. It's great to have for sale, but now we've completely excluded the for sale market. And people don't have that option. And now homeownership is suffering. And I'm quoting a developer that I spoke to about that specifically.
Thanks for that one, Mohammed. Michael and David, we're getting a lot of questions in the chat. First, how feasible do you think that efforts for reform are going to be in the short term based on your experience from this past year? And then we also got a question of what's the position of construction labor on this issue? Obviously, they play a huge role in the political structure of California, as well as this particular issue. So love to have either you or any of our panelists answer that one.
Yeah, I would say my outlook is pretty optimistic. You know, we really did receive a lot of people felt very good about the bills that we brought up last year. It was a shame, I think, that there were a few that didn't enjoy it, one being the realtors that Michael brought up. I don't want to speak for the labor, but I think that if I was a labor union or, you know, just part of California labor, I would be excited that an entirely new type of construction would be built. And, you know, when you're building these condos, I think a lot more of it is union labor because it is a worry about the defects, right? And so you're using union in order to, as somewhat of an insurance policy, right, to build a much higher quality product because you're afraid of that 10-year tail.
Yeah, I would say also, maybe I'll speak to labor first since that's what David finished with, but if you're building a high-rise product in a downtown urbanized area, likely Union GC would be involved in that kind of a product. And that's what the mayors are looking for too, to get that mix of homeownership and rental and to bring back their downtown. Certainly, I'm pretty bullish on this in the legislature. I think because we've identified kind of the third rail, certainly, and we see a path now. And I think, like I say, a more modest pilot, which doesn't create a big workload either for DRU or whoever else might be involved in approving, you know, condo maps, et cetera, and consumer protection aspects of what these deals are, and really getting the mayors behind this who demonstrate why this should work. And then we have, you know, British Columbia and Ontario who are doing it right, and to some degree Washington State and Hawaii and others. And so there's no reason why we shouldn't be able to do this. I'm bullish on the new 2-year session. And I think the financing pieces are very important now because of where interest rates have been in capital markets, et cetera, and the challenge of the financing to be able to bring this forward and protect consumers while also having another way to finance these deals is very important as well. But we just take this education piece, which is what we've been struggling with, because it's a pretty technical area, and we got to, you know, get members, focused on it and do that. And then there's also the communications piece to the wider public, because it's easy to demagogue this issue and say you're not taking care of consumers, and that's a challenge. I think we're all coming from a place of goodwill, and many of us are homeowners too, and we want to protect homeowners certainly, and we understand the challenges with repairs, but we're also denying a product to a lot entry-level product that could be available for a new generation of homeowners, and that's really a shame. And so that's why I think that's the case we're going to be making over the next year in the legislature.
David, saw you come off mute. Did you want to chime in on that as well?
I think to bounce off of that, our communities are strongest when people invest in them and buy in their communities, right? So that's really what we're all after.
Absolutely. And I think both what you said now, as well as what Mohammed brought up around, this also could create an opportunity for both someone to purchase their first home and then also rent it out when they don't want to live there anymore, thus creating more rental supply. So I think that there's a lot of situations where, broadly speaking, society would just be better off with more condo development that was safe and high quality. And going back to the conversion question, we got a great question. How does construction defect litigation impact ADU condo conversions? Assuming the small HOA and single unit nature of new construction limits defect lawsuit risk? Question mark.
I have an answer. So so the thing about construction defect liability is usually you kind of want a lawyer to approach you with your big HOA fund so you can pursue a lawsuit, right? Like there needs to be something backing for some sort of lawsuit. If it's just one unit, and usually the HOA, how they set these like condo maps within like a small lot is that it's just between two structures. There's no fee, maybe maintenance or something. I mean, like landscaping and maybe shared lighting, but there isn't that like big bucket of which you could pursue. Right. And so ADUs are pretty much safe from these construction defect litigation. I was talking to a developer who built for sale products for like the greater good for like missing like moderate income individuals. And he was like, yeah, I built 36 units and I had to make it so the HOA was like less than $50 a household. So then no lawyer could come and try to sue me in 10 years. Because every developer I talk to is like, when you get sued, not if, but when you get sued. So people are finding strategies of making like, for better or worse, really small HOA contribution limits so they can avoid lawsuits.
And I got another one for you, Mohammed. How do you see defect liability reform interacting with the recently passed SB 684, which is a small lot subdivision bill, and that was recently amended by SB 1123?
I mean, you wrote these bills, Adam.
No,
but I did the research.
I'm a cheerleader, Mohammed.
Yeah, no one had. I mean, very few people have done more for homeownership than California community builders. So I just want to shout that out real quick with the legislation that they pursue and the issues that they want to tackle. Putting that out there, you don't even have to respond.
I hate to break the fourth wall. We are giving Mohammed an award at our upcoming banquet dinner. So this is why he's being especially nice to me. But Mohammed, please continue.
Yeah, so when it comes to SB 684, I mean, I could see when it comes to like around 10 units, ADUs not counting, it could be a little bit higher. You could look at the implementation guide set by the Casita Coalition on SB 684, which I'm a board member of, putting on that hat. But what I see when it comes to smaller scale developments, if you keep the HOA costs low, you don't have that big of a pool for an attorney to go out and pursue a lawsuit. And at the same time, when it comes to small scale developments, homeowners could still pursue the rules and the right to repair set by SB 800, especially since it's a smaller builder. So like, I don't see this affecting missing middle housing as much, especially like we are still seeing townhomes being built across the market, but it's when you have 4 shared walls and you have like nearly 100 units, which are these like much larger developments, that we're seeing like that construction pretty much come to a halt.
Thanks for that. Oh, sorry, didn't mean to cut you off there.
No, you're good.
Okay. So I think we've had some really good thoughts and thinking at the policy level, higher level. I want to take us down to the ground level. We got a great question. The company I work for is vertically integrated. I'm a development manager. We have a development team, architecture team with a license, and a construction team with a license, all under one entity. Does that structure expose us to more liability in general? And Tammy, David, any thoughts on that one?
Yes. This is just, you own it. right? So I have had clients like that I say, okay, embrace it. If you own it, you control it as well. So you have more ability to look through your threads and see where the normal gaps of claims and litigation come up and remedy those issues. But you better have the right insurance and the right entity protection because it's just you.
Thanks for that one, Tammy. We'll let you know where to send the bill for that legal advice there. Although I know it was not formal, that was not actually legal advice. That was just your opinion. So let me amend that statement there.
Yeah, and I tell that to anybody on any side. So that's a uniform answer to everything, not independent direct legal advice.
Absolutely. Thank you for that one. And maybe zooming right back out to the policy level. One person asked, another obvious solution is a registry of defect reports correlated to builders. Just putting it out there for the group. If we had a registry of perhaps bad actors out there, I'll share. In my time working in affordable housing development in New York, there was a list of developers that were no longer allowed to do business with the city of New York. And for the group, is that something that might be helpful?
We do have a debarred list, I know, in the state of California. But there may be ways that we need to review that and shore it up for particularly identify bad actors. But David may have some thoughts on that as well.
Yeah, I think it sounds great. I wonder how that would look in operation, because I agree. If people are going out there, I worked at HUD for a summer in law school, and you did see kind of the same few that would go and build these uh, affordable housing around. And it was in Nashville, so it was mostly, I worked in the Southeast, so you'd see a couple that would go build a few and really do nothing to keep the building up. And I realize that's a bit of a different issue, but in that it created pretty harsh living environments, and those would get barred from ever building affordable housing and have it subsidized by the federal government ever again. And I think something like that would be really helpful. So yeah, I think that's an interesting point.
Well, and I'll just say that so the British Columbia system, you have to qualify to be able to build these residential products. So it starts in a little bit different direction, a higher standard. We have licensing obviously in California, but not necessarily the same type of qualifications. And then getting that bond requires a higher level of ability and financial stability and quality because they know they're underwriting you based on a claim. So they do it a little bit differently, which I prefer as the quality. It's fine to have that list, but you may not catch that new guy who's going to come on that list later. So I think I'd rather have an incentive based with backing than just a list. A lot of these days with the internet, you can Google a lot and find out claims just like you do with cars and things like that. So I'd want to move a little more and spend the time and the effort to give more protection and backing to a buyer. If that person who was a bad actor, where can I go to actually then get my warranty or get my home fixed, not just know, hey, I got a guy on a list.
And that would be the same thing with a surety or performance bond, where you wouldn't be able
Correct.
to get that without a track record of success. Yeah.
That's right.
Awesome.
Bond is back. Also, when it comes to inspections, like why aren't the inspectors finding these construction defect issues?
There's not enough of them. There's a couple. I saw that one scrolling by, and I was like, "Oh, pick me, pick me." One, there's not the liability is different for obvious reasons because it's a governmental agency and it's a third party. They don't have enough. They're not to all items. It's life safety. They do not go through and inspect every single thing, in part because that's what the developer and the general contractor and the subcontractors that are licensed, that is their job and that's what they're getting paid for. So unless it's egregious and you can mark that, reckless standard, which is very high, I do not think necessarily that the governmental agents should be responsible because that's not necessarily their role. They are a catastrophic catch-all is what they're supposed to be at the end. And we shouldn't shift the obligation from the subcontractor, general contractor, and developer who is getting the financial incentive on the upside to correct their own house, if you will. But the random inspections by the inspectors. If they are found to be flawed, then that should be the case. But it is very difficult. And that's why, I mean, it's a very valid question. Everybody, David probably knows this. I know it's not his company, but some GCs and subs will tell me, well, it was inspected. And I'm like, that's not a defense. If it's wrong, it's wrong. You need to do it right. So there's, again, put the incentive and the obligation for accountability to the parties that are making the financial benefit or chose to go into that market to make that financial incentive. And your best developers and general contractors will have their own QA/QC programs that go through and randomly check, not regularly check, because just like your kids shove things under the bed if they know someone's going to open the door and look in, you can't. It's human nature. You cannot set these things up on a regular basis. You have to have random checks so that everybody's held accountable down to the, it's labor all the way up.
I think on the backside of that, though, what we were talking about earlier for the right to repair, if you're going out there and you're repairing these defects, I do think that they should be inspected in order to create that release. So that way there is a neutral third party, whether it is from a city inspector or, from a QA/QC coming out there. I think I agree with you that they shouldn't take the risk on the front end necessarily unless it's egregious. But I do think on the back end, they should be there as a neutral party to say that this did get fixed and they should no longer be liable for this defect.
So the interesting part, I don't disagree with that, David. I would probably qualify it a little bit, because what I found for clients that maybe get a claim from somebody and I have to deal with the CLSB, who I like those guys a lot, but I've had inspectors tell me that's not my area. I don't really know how to look at what you're asking me to look at. That's better suited to civil litigation in a lot of cases. So in a perfect world, I think you're 100% right. I would worry that there might not be the things that they're as they just haven't been trained in it. So I would, in my mind, I was thinking, you know how we do it for the ADA, right? We went through all the lawsuits with the ADA. You have this list and they're independent, but they've been vetted. It's kind of like a safe harbor inspection. They're not government inspectors, but they've run through the program, and it seems to work as a combination of a little bit of both. So that maybe you get the person who is qualified to inspect the area that you have repaired. And then just play a little devil's advocate, even though I'm somebody who primarily represents, developer builders, I'm okay with the release, but I think that there should still be some warranty in some cases. If you would have normally had say a fit and finish warranty or a little warranty related to that original failure, because you're not getting your original one, right? Unless you pay like we do under SB 800, you could buy out of your problem. And then the homeowner goes and has a third party repair, but they have the rights against that third party. So there's a little bit of push pull on that in my mind, just because I occasionally have seen the repairs that maybe something for whatever reason wasn't quite right, but your liability should be greatly reduced to only that specific potential issue. If you did repair it, it's been inspected, right, and you move on. So that's probably my only caveat on that. But I again don't want to push everything to a government inspector, because just my experience with them is they just don't always have the right background and experience to do what we're asking them or presuming that they will do. So what other system do we have? And I haven't heard, and maybe the rest of you know a little bit more, my experience with that safe harbor and the ADA, it has actually worked out well. We use that list when we want to go and have an inspection, and we use those folks that are on that list that have been qualified, but they don't work for the government. They have their own insurance, they have their own independent obligations, but they have been vetted. And I think that's kind of what would be beneficial in your proposal.
Thank you for that one, Tammy. And unfortunately, I think we're about at time. I want to make sure we get out when we said we would, or else Mohammed won't invite me back to moderate any more of these. But as we close out, Mohammed, how should folks contact you if they have more questions, especially those that didn't get answered? We had a great one from my friend Linda about modular housing we didn't get to. How can they follow up with you?
Yeah, definitely. Please check the chat. There is my email. send me your questions via email. If you want a specific panelist to have a response to your question, since I am not a lawyer, I am not a banker, and I am not Michael Lane, the great Michael Lane or Adam Briones, like a policy wonk, right? Like a genius. These geniuses, right? Please send it over to me via email, and I can connect you with the right person, or I can answer your questions directly. And please subscribe to the Terner Center newsletter. That was sent in the chat as well. You will see great papers coming out, legislative recap of what we've seen in California when it comes to legislation this year, and a few other things that you will particularly enjoy if you enjoyed this wonky webinar. And yeah, that's how we follow up. Should I pass it to Adam to close?
Awesome. Thank you, Mohammed. Yeah, I think we're about at time. So I want to say a very special thank you to you, Mohammed, Tammy, David, and Michael. I think this was a great conversation. And I think anyone who was willing to listen to a nuanced argument, I think got a lot of great data that we can all take forward on this important issue. So thank you again. I hope everybody in the audience has a great day, and we'll talk soon. Bye-bye.